Okay, so then I can share this copy. If you want to see this training, I'm just making it live on YouTube. And that will be the YouTube link for tonight. So you can go back and watch this on YouTube. Y'all getting that? You can go back and watch this on YouTube. All right, so let's get started with tonight's training. I'm making this YouTube private, so it'll just be available for you guys to go back and watch. So I'll be recording it there and training here. All right. So Jasmine just became a new subscriber. There you go. So in order to watch it, you're gonna have to be a subscriber. In order to rewatch it, you're gonna have to be a subscriber. Catching that? All right. All right. Who saw what gold did last week, man? Who saw what gold did last week? Oh. That was scandalous for gold to do that, to sell off like that. Wasn't that scandalous? If you are using your robot and your robot took trades, type in number 2. If you're using your robot and your robot took trades, type in number 2. Just want to see if anyone's using their robot. Just making sure. All right. Next question. We're going to move right on to make sure your questions are in the question section of the Zoom, so I can go ahead and read them there, and then I can answer your questions live. Tina Guzman asked a question tonight. Doc, can you go over the 5 pillars? Thank you. All right. Who can tell me our 5 pillars for trading? The 5 pillars. If you remember the 5 pillars, who remembers the 5 pillars of trading? Type that in. All right, Yvette Jordan, she's on. She says what it is. Okay. All right. Okay. Very good. So we're going to talk about structure tonight. We're going to talk about structure tonight. Who has been watching that Australian dollar get stronger and stronger and stronger and stronger? We're still going to be talking about structure tonight. And so, okay, let's go right into the structure section of this training. going to talk about support and resistance levels, defining them, make sure we understand those support and resistance levels according to a different type of structure. All right. There is what's called the ATR structure as well. Average true range. The most underutilized tool in all of trading. Average true range. The most overlooked, underutilized tool in all of trading. And I want to teach you that in this free course tonight, and why, if you commit yourself to learn about the range, you can understand where price is going to move, how far price is going to move, how far price is going to keep going up. Does that make sense? Write this down. Price moves in a range. Anything outside the range is trending. Price moves within a range. Or let's use another word for range. How about this word? Price moves within a what? Can someone repeat that to me? Average. Price moves in an average. In order to move from ranging, watch this, to trending, you have to move outside of the average. When price moves outside of the average, it is breaking structure. I want to explain the principle before we see it on the chart. Because people will miss the range when price is moving in a range. And then, in order to get out of the range, right, it has to break the range in one way. A range, what I call a pool. We're going to go over that in this tonight, and I hope that your minds are illuminated after I share this with you. Right? Because you need to distinguish between when it's moving in a range and when it was moving out of a range. But here is a concept that many have not learned in trading, and this is what really hurts us in trading. We have not mastered the basics, just the fundamental basics of a candle and what either we have so many people who teach price action. I'm not against price action. I'm in agreement with that price flows in a certain direction based upon the size of the candle, and that the candle can tell you everything that the market is currently doing with current price. However, it is incorrect to say that you're not looking at previous prices, which is lagging data. Lagging data is previous prices. In other words, and I'll explain to you what I mean by this. And I'm going to use the line chart tonight. That's why I'm clearing this chart off. Do y'all see this line? Do y'all see this line? All right. This is important. Price, and I'll move this out of the way so we can really see what I'm going to say. You got to really see this. Can make a high, right? But at the same time, it's making a high, it has made a low. Then price can come in between the high and the low. I want y'all to see this. So the market can start moving up. Just follow me. And it can stop at a high. But it started from a low. And then there's times it starts coming back down, and it's in between the high and the low. Now it's in this in between place that we have questions whether it's going to keep buying up, double top, or keep going down, double bottom. Do you see what happens inside of a range? Because inside of this range is where most traders get caught. Inside of this range is where most traders get caught. All right. Do I buy here or do I buy here? And if I buy here, do I get out here? All right. Or if I buy here, what happens if it sells to here? It's in the in between. It's in the in between. Is this making sense? If it is, type in number one, because this is where all trouble lies. All the trouble lies between the high and the low. This is the fundamental basics of trading. What is it going to do inside the range? What is price going to do inside this range? That's my question. I am inside the range. What am I going to do? Am I going to buy back up? Am I going to sell back off? Right? Did I get in too late? Am I getting in too early? But what if I get in right here and it come down right here and then it break right here? It is in between here. It is not right. It is in between these two lines where we're all caught up. If I'm making sense, say you're right. I want to see how many people I have participating. Because price is often stuck inside the range. Range. This is why I'm teaching this class. I'm going back to the basics. I'm going back to the basics because I think we miss something. I feel this in my spirit. I feel in my spirit we're missing something. That there's just one little piece. There's just one little thing that I'm missing. And if I kind of get this, I feel okay, I can kind of start adjusting myself. If I'm talking to you, type the number 2 in here. It's because it's like, all right, Doc, I'm being very transparent with you. I've been doing this for years, right? This is a transparent moment. I'm being honest with you. It is that little mechanic that I'm missing. Who am I talking to? I'm reading the chat. That's why I'm quiet. I'm looking at who's responding. I'm looking at everybody's response, really. I just want to see who's engaged because this is critical. This is why I did doing the free classes. This is critical. Everyone needs this. Because I don't care what they're saying. If someone says I'm 9-3, I'm 7-2, right? It's these three losses that took all the profit out because these were so small and these were so big. These were so big, right? If I'm talking to you, say yes, big facts. I can go on a winning streak. It's these damn two losses that I got on the winning streak that seems to start eating up all the profit that I have. Come on, big facts. Am I talking to someone? I'm going to get you free tonight. Or I'm going to attempt to. I'm going to attempt to. But what we have to decide, we all have to decide some things together. This is why I've created the 5 pillars. This is what makes the 5 pillars make sense. Okay? And so I want the if you don't have pillar number 1 together, what's pillar number 1? And this is for everyone. It doesn't matter what you do. You can go outside of Spiller and do this. It doesn't matter. But if you don't journal, you're not serious. Because that's how you know the range. You're going to know the range. You're going to know when it's stuck in between a high and a low on one of those time frames. You're going to know it. You're going to see the range because, all right, are you ready for this? I'm not going to be too technical, but I'm going to jump ahead. I'm going to jump ahead of some notes just to give you this because there's a 1 minute range. There's a range on the 5 minute. There's a range on the 15 minute. I'm just jumping ahead real quick. There's a range on the 30 minute. What if I tell you that every time frame has within itself, and this is what makes trading difficult, its own range? That individually they have their own ranges that make up their own price movement. Because you have people down here trading, and you have people right here trading, and you have people right here trading, and all they need is a little 1 minute trend, and they're done. Is this making sense? Is this making sense? Every time frame has a range. You got H1. It has its own range inside. Okay, so then I really want you to catch this. I really want you to catch this. There are ranges within ranges. All right, so then you have your RSI on your 1 minute. You have your RSI on your 5 minute. You have your RSI on your 15 minute. Do you not know inside of each one of those RSIs is a range? So if I and I want to make this make sense, but you've got to be able to see it so that you can see the range within the range within the range, and that's where people getting caught up. You're getting caught up in the micro and the micro missing the macro. I'm going to show it to you today. Who wants to see it today? Type in number 2. It's going to get deep. Type in number 2. It's going to get deep. So then, if I did this range and say, show me the daily range, and look back 14 candles. How many candles? I want you to look back 14 candles. How many candles? Do you see how many candles I'm looking back? I want you to look back 14 candles. How many candles? 14 candles. How many candles? 14 candles. And I want you to draw me a line. I want you to look back 14 candles, draw me a line. Then I want you to draw me a second line that looks back 21 candles. And draw a second line. Then I want you to look at them by this exponential moving average. This is what makes me the GOAT because I choose all these. Never mind. All right, so I'm gonna do it. I'm gonna show you something. Are y'all ready? I'm gonna show you something. You gotta be ready for this. You gotta be ready for this. That is the day line. And you see the green line is the 14 and the dotted line is the 21. But I'm going to take the 21 out and I want to show you the range within the range. And this is why people are just dying in the market. I mean, the market is just slaughtering them. Are y'all listening to me? I'm serious. The market is just it's killing them. And they're like, I'm not getting what's wrong, Doc. I'm not getting what's wrong. I'm going to show you what's wrong. Hold on. So that's the day range. Now I'm gonna leave this on the day range and I'm gonna show you that the day has its own range. Are y'all still with me? Daily range. So the day has its range, right? How many of y'all see the daily range? How many of y'all see the daily range? I'm trying to get everybody to participate because I don't want to repeat myself. I really don't. I promise. I don't want to repeat myself. Right. But I'm going to show you something because your eyes are going to open when you see this. Now we're going to drop down to the 4-hour chart. So the daily range has a range. Let me do this one. I'll do this one. Let's see which one it is. Let's make this line thicker. Y'all see the daily range? Now we're going to do the 4-hour range. So the daily has its range, and look at how the daily is. But inside the daily range, there's another range. And you'll see the 4-hour range. Y'all see that 4-hour line? So then there are two ranges here. Look how fast one range is moving according to how the other range is moving. We're looking at frequencies, right? And this is what a lot of this is, and why a lot of people are not successful in trading is because they can't discern the frequency. So then while the day is up here, the 4-hour converges back and forth, back and forth, back and forth on the day because the 4-hour has its own frequency. Are y'all ready to get wild? I'll tell you, I'll open your eyes today, but I can't open them if you don't want to open them. You know what I mean? So I'm gonna make the 4-hour. I'm gonna go down to 6. That's the 4-hour line, right? Now, what I'm gonna do is let's go down to we're gonna do all of them, all the way down to the 1 minute to show you why people struggle trading. We're on the 4-hour, the 1-hour, and so now that has its frequency. Well, let's put the 1-hour on there. Is it starting to make sense now? How you get caught in the between? Because all this movement and those candles are going up and down, back and forth, up and down, back and forth, back and forth, up and down. 6. We'll go with 4. We'll make this the 1-hour. So now we're going to watch the 1-hour frequency. Sorry, let me do this. How many of you see why you're jumping in and out of the market? How many of y'all see why you're jumping in and out of the market? You can kind of see why you're jumping in and out. There's one consistent move happening on the day chart, but you're out of frequency on the other time frames. Ooh, that'll preach. If I was in the church meeting, that would preach, right? So I'm looking at the 4-hour range, the 1-hour. Look at how this is scribbling. You're in the wrong frequency. While one is moving, the other not moving, you get caught up in between because there's a range within a range. What would happen if we go down to all the way to the minute chart? Can y'all imagine what the minute range looks like in comparison to these? Let's see what the minute range look like, because this is how we're trading. Come on, let's look at the minute range. So this is the day, this is the 4-hour, this is the 1-hour. Let's see what the minute range look like. Are y'all ready for this? Look at this frequency, because it's a frequency within a frequency, within a frequency, within a frequency. Look at that. This is where I want you to open up your eyes, because this is where trading changed for me. We're talking about pillar number one, which is structure or understanding range, right? If I went all the way back up to the day chart and I zoomed in and you took off all those other ranges, excuse me. Here's the biggest problem that I see with a lot of traders. They don't see that within the day chart, right? All that movement on that 1 minute chart is just noise. Minor structures are pit stops. So then my question is, when you're in a range between a high and a low, context, what matters? I'm going to show you how they move outside the range, but context matters when you're in a range. In other words, prior to the range, what was happening prior to the range? Context matters. Does this make sense? So if you are going to take this trade and it's stuck between a high and a low, the first thing that you want to know is what's happening in the context. If they're in gold, in case there's no ceiling, because everybody can predict a bull run, but nobody know when it's going to turn. That's why everybody gave up those profits. In the context of what's happening, and you see this moving all the way up, right? And then it moves all the way back down and take all that profit. Right? In the context, no one knows when this is going to happen. I want y'all to hear this. No one really knows when that big candle is going to happen and shoot that market all the way back down. Does that make sense? No one knows when that's going to happen, but everybody's happy when this is happening. But we don't understand that price was extending out of a range. And he will extend that range only so many times. We call it Elliott's wave. Have you ever heard of Elliott's wave? So then you have to know the range within the range, because this range only reduplicated itself maybe 5 times before it started coming back down, because once that wave got to the 5th wave, then that wave collapsed. Because a range is nothing more, watch this now, that when price is in between the high and the low, it's creating the range that will produce the wave. It's got to create a range. So now we have a range here from 100 to 0. We have a range now. Now we're going to move according to this range. Now the range is set. Right now that I'm in this range, I'm going to now trade outside of the range. Right? How many ranges is this going to move in this wave before that wave gets weakened and collapses? But before price moves, I want to write this down. Before price moves, and I don't care who it is, this is just market geometry. Before price moves, it has to create a range, so that in that range, we can define the extension of that range, right? Whether it's 2 deviations, 3 deviations, 4 deviations of that range. But before price moves, we have to have a range. Now, what happens is most of the people who are trading are trading or finding themselves trading within the range without context. They're in that range without context, asking themselves, will this range extend? Is this range going to extend? Because that's what I want. I want the extension of the range. This is some good teaching tonight. I hope, but this is the basics that we're supposed to be learning. I want an extension of the range. That's how I define my risk to reward. My risk to reward is based on the extension of the range. So how big is this? So if I was to come in and measure this range, if I was to come in and measure and says, okay, from the top to the bottom of this range, which is from here to here, right? That's the range. You can go to there, or you can go to the body to body. And then you will see what happened around the fifth wave. Do we see the fifth wave of that extension of that level? Look at the fifth wave. So this is 2 deviations. This is 3 deviations. This is 4 deviations. This is 5 deviations. On the 5th deviation of that, we created this, and then we have this. That's why it's important to define the range. You usually have to pay a lot of money for this course that I'm giving y'all tonight. Trust me, anybody that's worth their salt will say he's telling the truth. That if you're trading, you got to define the range. Then what is the high? What is the low of the move? So then, okay, this is the basics. This is basics. This is basics. All right, are y'all ready for this? Here's the basics that you're supposed to be learning. All right, if price moves up and price moves down, then it is in a range between here and here. And anything in between that range, watch this, you don't have a trading strategy. Your trading strategy changes. Your trading strategy changes to sell here, buy here, because it's in that range and it's only stuck in that range. So then you could be taking several sell and buy opportunities as long as price is in that range. However, once you define the range, right, you look at the range within context. What has this been doing? What has the trend been doing? Has the trend been buying or selling? Buying. So then I'm inside of here only trading at the bottom of the range because I've defined it. I don't trade in the middle of the range. If you come and find yourself trading here, this is a very dangerous point. Because there's a 50% chance here that it could buy up or it could sell off in between the range. Do you understand that? So once you're in between this high and this low, in between here, you're at a 50, right? And so then after that 50%, there's usually like the 60%, right? After that, am I making sense? Right? So once you're in between that middle, there's a 50% chance that that train could go up, that thing can go down. But right here at this 50% level in this range, at that range, at this range point, you're looking for price, watch this now, to give you a signal. In this range level, you're looking for a signal to continue this trend back up to this TP1. And then if it's going to go past this TP1, now you're into the extensions of this range, which now gets you past 1-to-1. Because if you're risking this, if you're getting in here, then you're 1, my stop loss is here. My break even is here. My reward is here. And so now I'm looking to take this trade, hopefully getting a signal inside the range at this 50% level that they're going to buy back up to this high to test this high. And if it breaks this high, how far on an extension is it going to go to move this range higher? Now, this is the basics of trading. Very basics. Very basics. Now, I want you to see this, because when price is moving, you wanted to be able to know, okay, where's the high, where's the low, and then what happened when it got to here? You bought up, right? You can buy at the bottom. Hopefully it gets to the bottom, because as I said, when price moves in the range, the best place to buy is here, not here. The best place to buy is here. This is the best place to buy. This is the cheapest place you're going to get to buy, at the bottom, right? A lot of people would rather wait over the bottom, right? So then once we define our range, you take your fibs, you measure your range, and you say, okay, I now know my extension levels on how far my range could go, right? I see outside of the range where it could go in this level. I'm looking at 50% of that level. I go to 50% of the 200, 350, 450 to the fifth level, and I look for some type of rejection around the fifth level. Type of number one. If you had fun with this part of our class tonight, I got some other things to teach, but I first want to teach this because I want to make sure, y'all give me a second, I want to show you something. I don't want you lost and confused, but I want to show you something. If you're going to buy, I want you to take a screenshot of this. I just heard something. All right. If you're going to buy in this equation, I don't know, someone was just talking to me and was like, I really want to understand this. Hold on. Who was that just said that in their spirit? I just felt that. Someone was like, oh, I want to go back over something. Hold on one second. There it is right there. If you're going to buy in a place like this, and we'll put on the candles, if you're going to buy, you want to buy at the bottom of the range. At the what? The best place to buy is at the bottom of the range. The best place to sell is at the top of the range. So your best place. At 50% of that range, you'll typically see them break the range on the 50% and look for them to test around this 50%, and you saw that move up. So I'm going to show this to you in an example. I'm going to write it over here, okay? I'm going to draw it and I'm going to write it. I want you to have this as an example. All right. So we know the high point of the range, right? We know there was a low point of the range, right? As we see it here. The most important part of this range is your 50% level. What's the most important part? I just make sure I get this. This is why I'm the GOAT. 50%. So once you define your range, ask where's your 50%. You're looking to buy here, but you're going to ask here, how will I know to buy here? Because at the bottom of the range, right? If you're in a buy context, which means in the context you're buying, right? This 50% level gives strength to the buyers. The 50% of the range gives strength to the buyers. Do you get that? The 50% of the range gives strength to the buyers. Did you get that? So when I define my range, and a range is when you see these two candles right next to each other. This is in pillar number one. And pillar number one defining the structure, right? We define our structure. So I know this is a structure, and I know this is a structure, and I see price in between it, and it's ranging in between those levels. Does that make sense? Right? So I have my range. In the buying context, I want to see what on a lower time frame. I'm going to write this here on a lower time frame. I want to see buying strength above this level to let me know that it's going to this level on the lower time frame. For instance, like if this is on the day, you can go down to the 30-minute, sometimes the 15-minute, and the pattern you're looking for is a fair value gap, a big candle on this level. That makes sense? You're looking for a big candle on that level. Just like you're looking for, when it gets to here, you're looking for that big old buy candle, that opening and that big old close. You're looking for it right here on that range. You're looking for the next one, if it consolidates, another one right here on that range. If this is making sense, type in number 2. You're going to look for this candle. Why? Because they're going to create a void before they move. What are they going to create before they move? They have to. They have to break the range. In order to break the range, you got to put in the void. Everybody type in void. I've been teaching on these voids. If you've been learning these voids, type in number 2. I've been teaching on these voids. So they're going to have to, once you define this range, if we go down this little time frame, they put a void in down here. And that void was so big that this candle here didn't even come back down and close it. So they voided down here to push this. Then we got on the 50% range. Watch, they voided it again. Inside of this candle on the day chart, they voided it again. Because that's the only way they're going to be able to move. They can't move without creating a void. I need 50 people to type in the word void. Look, and Ro, this is going to help you with the bands. Because in order you to move out the bands, don't you need a void? You can't move without a void. You can't move without creating some kind of a void. You can't. And so when you create that void, I'm looking for you. I'm watching you. I don't move till you move. Show me your footprints. When you show me your footprints, I'm there. I'm waiting at structure. I'm waiting for the void. Show me that void. Because then what you're going to do is you're going to put in a bunch of little bitty candles, and then you're going to void me. All right, then you're going to put in a little bit, and then you're going to pull back, and then you're going to go, and then you're going to do. How many times y'all have seen it do that? Right? You have to keep a void. And though I tell people, way back, it's going to pull back in that void. It got to eat some of that up. It got to get some of that equity out of there. Now, the buy is at that 50% of that void, but the better buy is at this void. If it's here, you're looking here, you're splitting your lot size up here and here, 50% here and 50% here. Hell, if you don't hit here, if you hit here, I'm getting it on both of them, and both those positions are positive. It looks like this. This is what it looks like. So now you're in this range. You pull here. I'm looking for a void. Poop. That void comes in. All right, you're saying, oh, pull back some, pull back some, pull back some. You should have been waiting right here, but you pull back some up, it pull back in that void, getting some of that void, and then bam, it goes back up. Then it consolidates right here. Then it's going to make another void. And then it's going to pull back in that void, and then it's going to go up again. Now, when it hits right here, it's going to do 2 things. It's either going to make a void going down, right? Or it's going to void that thing going all the way up, breaking both of these levels. Now you're into your extension outside of the range. But inside that range, if you look right here, this is the basics of structure. Inside this range, when AUD, and this is AUD, it's the same thing. When that joker pulled up, those buyers was waiting right here. Can you see the context? Who came in right here? I've been teaching this now. Who came in right here, class? What did they create right there? Come on, talk to me. Talk to me. Oh, are y'all seeing it now? Do you see it? Do you see it? Do you see it? I've been teaching this for a couple of weeks now. I think y'all starting to catch on. And so now, why am I looking for the buy before I'm looking for these sales? Because I'm looking for this buy in context. Somebody put some money in, and somebody created a void. A what? A void. A void. They ain't even filled it yet. They've been holding on to it. They've been just sitting under, just sitting on it, just sitting on it, just sitting on it. So then on this context, you already would have been looking for buys right here. because right here, they've been holding us up for days. So this didn't surprise you. But this candle closed above this small range here. So they put in another void down here. Somebody bought in right up in here. Is this making sense? Somebody put some money in right there, but you were already looking for them to put in money right there because you saw it in context. Somebody say, I see it in context. Come on, repeat after me. I see it in context. Come on, repeat after me. I see it in context. 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 Well, so if I'm pulling back and I'm saying to myself, okay, Doc, well, when do I buy? When do I buy? When do I buy? Well, first thing, I want to buy when they're buying. See, they bought. So then I know when you put in this, because look, you came down here. Well, you put in two, that ain't normal. You can tell this ain't normal. But look what it did before then. Didn't look at the context. Look at the pullback. So then, watch this. They sat right here, got right back inside of there, and they created a range, right? Because once you make a high and you pull it down and you get here, you now have a low. Watch this now. What does price do? It settles in this low. And then once it settles in this low, look what happens. Come on, y'all, talk to me. Y'all talk to me. Look at this. Selling this low. Once it settled in this low, it took off again. When I gave you that board, do you know you can tune your board to see this on those low time frames, and you're just buying and buying and buying and buying and buying and buying and buying. I don't know if you caught that. Okay, so now, did this give clarity to what you have been doing? Because when priced in a range, we define the range. I want to know what that high is. I want to know what that low is. Right? So when you're pulling back, where are you pulling back to? You're pulling back to here, the last structure level. We taught you how to do that. So now it's sitting on this structure level. It won't break this structure level. Right? It won't break this structure level. It's sitting on this structure level. Between this structure and this structure, it's sitting on it. You'd have been waiting on it anyway. You'd been like, all right, I was waiting for it to buy. And then it bought up and then it sold off. And then it bought up and then it sold off. And it bought up and then it sold off. And then it bought up and it just kept buying. And it kept buying. Watch this. Now, what we're seeing here is inside of this range, this small range, for days, we had little sells and little buys. For days, it was just congesting in small candles. Now, I want you to expand this. When you congest, you express, right? And so you want, this is what you want. I hate to say this, guys. You want the market to do this. You want the market to consolidate. This is still considered consolidation, right? Why? It's still inside of this range. This low, this high. Look, we've seen it. We drew it out here. We drew it out here. It's still a consolidation, right? And then, bam, it broke that. And then why when it broke this, it came back, retested this, creating another range and sat on top of this range. Now then, once we had all this ranging for this amount of time and this amount of time of ranging, look at the expression. And the expression of this can be measured to say, all right, this is one, and then you can look at this one being one. Watch this now. How many times did this express itself by the same measurement? So if I was to measure this, because this is really one wave of consolidation, I'll show it to you. Let's insert a shape. All right, this is a range. Now, how many times can this range be reduplicated after a breakout? And so you can count the waves on this range because it's not breaking up here, it's not breaking down here. And so if we took this and we drew it and we reduplicated it, how many times do you think it went up before it hit here? 5. And you can see that those waves going up. Wave 1, wave 2, wave 3, wave 4, wave 5 collapsed. By moving this one just right above it. One wave, and then we go right above it. 2 wave, right above it. 3 wave, right above it. Are y'all seeing this? Y'all see the waves? So he just went by this level. And if you just start counting them, you just start seeing them going up by level, by level, by level, right? And then once he waves out, he starts weakening out. Now, if you have my bands, type number 2, this is why I made them only on the platinum level. Let me show you something. I'll put one. I have to put one on there that you don't see. All right. If you see these bands, price is working off a deviation. You can kind of see the zone, right? And you can see it flip up a zone and flip up a zone. If I was to come in, right, and I have this set at this level, and I would add, and please do not do this, I'm just giving you an example, and I was to add another one, right? But then I would change it from 3.0 to 6.0, 7.0. Y'all see what I'm doing? 8.0. This is for people who have my bands. I'm just showing them the waves. These are waves or extensions of this band. These are extensions of that particular band, right? And I click them, bam. Where's AUD? Lord have mercy, I moved off of it. All right, and you can see these are extension levels or deeper extension levels. And price will move inside these extension levels and bounce out. So you can see that one, that one, that one. If you took it down, and I think Ro asked me about this, and I will go over this tonight. So I'm gonna go over this a little for you tonight. Ro, what's your question that you want me to go over? And then I'll get back to some more basics. We have I went over an hour worth of that training with you guys. Did that training help you on understanding the in-betweens? What to do in between, where to wait, what to do? How to get in the range, how to look for the range, how to define the range. Looking at the extensions of the range. If you keep getting on these classes, it's going to get better. Yes, Doc, at this minute withdraw while listening to the voice and handle so much in your business. Thank you for the last lesson. You're welcome. Go ahead, Ro. Ask your question, babe. Or you just wanted me to talk about, can you go over the bands? What part of the bands did you want me to go over? All right. I didn't know what part you wanted me to go over. Okay. All right. Well, she's not on. I'm gonna go back over some more. Let's go look at GU. Let's look at GU tonight, people. Now, we're gonna look at GU tonight. I'm gonna give you some analysis on GU. We're gonna be looking at it from, as this is a new month, what we're expecting GU to do. If you look at last month, we had a high, we had a low, and we're inside of the range. Do y'all see the range we're inside of? When we bought up, right? We pulled back, right? Now we're inside of this candle. So inside of this candle, right? Inside of this GU candle, I know where my 50% is, which is important for me. Right? And I'm looking at price pull right back into that region. I would like to see, as I defined this for you earlier, aggressive buyers over this 50% level of this range. Do you see the 50% level? So I'm looking in that range definitively. I gave this on gold the other day. People were actually winning off of that trade. But if you look at this range, right, we defined this range. I defined the weakening levels and the strengthening levels. If buyers are going to be in here on the range of this candle, the high and the low of that monthly candle, we're going to see buying strength sit above this on the monthly chart. We're just starting out on the month. This is what's so awesome about this. You get this perspective to see, okay, are they going to challenge the monthly high from last month? Are y'all seeing the range now? We're just looking at it on a lower time frame. I'm getting to show you this on a higher time frame. It's stupid. Do you see it? Right? We're inside this range. And the question is, at the 50% level of this range, will we see some type of bullish extension to where price will push back to the top of that range doing a double top? Will it do that? Or will it get weak under this 50% level, under the 61% level to come back down and test this? So on GU, we're in between. Is the lesson I just taught making sense now? Because we can see that could either choose to go up from here or it can go down from here. We're inside of the range. This is the high, this is the low. Are you seeing the lesson? I'm gonna walk you through GU. Come on, I'm gonna walk you through it. See, we did all of that study so that now we can come back after the study, we can come back and we can put it into practice. We have the high, we have the low, we have the 50% level. We're watching to see that in this in between price, in between, what is price going to do? Because I want to be on the right side of money. Are y'all seeing this? It doesn't matter if it's gold, don't matter if it's any of those things. I want to be on the right side of money. So if I looked at this and then I went down to the weekly, I'm going to say, okay, this is Tuesday. All right, on a Tuesday, look at what's happening on a Tuesday, right? So then on the beginning of the month on GU, we had an explosion of, who is this? Do you see the high and the low? right here in this range. Did you see it create a range? So it created this range, right? Price bought up, hit that, and then bought, sold back down and hit that and created this range. Now, when it got back down to the bottom, I just taught y'all this. What was going to happen when it got back down to the bottom of that range? What were you expecting it to do at the bottom of the range? If you had already knew you've been waiting right here, what were you expecting it to do at the bottom of the range? This is why I just taught that long lesson. I was looking for the buy. Now, how do I know that that's the buy level, right? This is from last month. This is where they were last month. This is the last month. And so right at last month, what happened this month? They bought up going into the beginning of this week. What was this candle? This is January. Sorry, on the weekly. Not last week. I mean, I'm saying last week. Sorry, shit. Wasn't last week. But when you define this range here, right, you can look to see, well, what is the context? Can someone tell me what the context is? Right? We will call this a bullish flag pattern, right? Where it's coming here and it's flagging down. And you can see it flagging down. And out of that bullish flag pattern, we had a doji out of this bullish flag, and it bought back up out of that flag. Do y'all see that on GU? So then if we looked at the context, were we not expecting a buy? Do you think they just put this money in for nothing? So the context of this downward movement is that eventually the people who put in this money was going to push this money back up. Everyone, I need you to get this, write this down. There's 59 of y'all here. Write down context. That's what makes the bands come to life. If you're trading and you're inside of this band, that's what makes the band come to life, the context. You're like, okay, you're only stretching down to find some money down here, and then you're going to buy up out of that, right? But I have to look at the context, right? What has big money been doing this whole time, right? Well, Doug, it's yes, it's ranging down, right? But as it's ranging down, I need you to see this. As this is ranging down, you need to look at the context of who put this money in right here. And if we change these candles to these bars, I think you'll see it even better. Look at the open bar. Let's look at the void. All right. So then, do you see this void? Do you see this? Somebody got really aggressive right here and bought up from here up to here, and then bought up from here up to here, and no one has been back down in the inside below this candle, leaving all that back open. So all of this is back open back over here, right? So then it pulled all the way back down, cleaning up this void that people probably forgot about because it's on the weekly time frame. It's like, all right. And if people would have drew it from the weekly context, they would say, okay, it's going down to clean up. And it got inside of this void, right on top of this. And then what did you see? They came in right here. Of course, it's easy to see in hindsight. Look what they put in. But if you would have been paying attention to this move, saying this is just a lesser move, right? You'd have been waiting right here. You'd have put the house note right here, the car note right here, the kids' college right here. Well, why would I have done that, Doc? Because you'd have been thinking like a rich person. And you'd have said, okay, I'm watching to see how far you're going to come down. Now, if we take all of this off, and we know what that was doing for the month, but I'm going to take all this off. And you talk about drawing fibs, right? You're drawing these fibs on this. And you're saying, okay, this is the high, this is the low. Oh, wrong way. What level did he come down to, guys, before he made a decision to buy back up? And if you were that patient person, yes, it took a long time for it to get here, but you could have been selling, buying, selling, and then when it got right here, you've been like, I've been watching these people put all this money in. They're coming right back down into that to draw this money out. And then once they get this money out, they're going to shoot up. That's how you do your rich. Now, when you're doing that and you know what they're putting in these high time frames, no, it don't make sense on the 30-minute. This only makes sense on the 30-minute when you're looking at this from the weekly. Because if I go down to the weekly and I just look for this one area, the only reason this makes sense that they bought it right here, right, is because of this candle. But do you know how far I got to go back on the hour chart just to find that thing? So it doesn't make sense in the higher context of your trading. So here it is, right? You're looking at this candle and you're saying to yourself, I'm gonna put my candles on here. Second. Let's look at some weekly candles. Are y'all having fun tonight? I'm trying to teach. So let's look at the weekly candle on the hour chart. I'll close this up and we're going to go back over here. Let's find our line. There we go. So now when we look at this from a weekly level, you can see these are weekly candles. Price sold off down here. They bought up. Do you see the void they put in when they bought up? And nothing came back down and closed that out. Right? But we do know that this is on the 50% level of the fibs. There's that 50% level right there. And off that 50% level, we should have seen an influx of big body candles right inside of here. Right? We had to see a void of candles in here. We're going to find them right in here. Watch me zoom into them. It's right there. Let's see what they put in. Look at all that money they put in right there on the hour chart. Do y'all see them? They put in all this big money right here, but this is on the weekly time frame. We'd have been trading like, why are they buying like this? Ooh, they really buying today on November the 26th, when all they were doing was putting in money on the weekly to start shifting this trend to start going up higher. These big candles should not surprise us. These big I'm not surprised that they put in a lot of money right here because that was at the 50% level. The what level? That was at the 50% level on that fib, right? Down here is at that 50% level on that fib. I'm not surprised it got down here. And it had to put in some big buys, big money buys right here to shift this market up. And they broke that structure. So then watch this. Then they came in and look at this money they put in. Ain't no sellers in here at all. Look. We would have been surprised, like, oh, they buying up. Why we shouldn't be surprised that these things happen. Why? Because they put in this money right here. So when they put in this money right here, they came back and put in this money right here. Can y'all see the other places they may have put in money? Can you see them now? Them is the people. Can you see the people? Type in number 2 if you can see them. Can y'all see them? Because right, it's at the 23.6 on that big move. So right at the 23.6 level, look what they did. They hijacked the whole market, but it shouldn't have been a secret to you. They were at the 23.6 level. They bounced up from that 50, which was down here. That 50 was way down there. They're back on the 23.6. Look at what they did. Who was them? Them, whoever them is, right? And they put in some more money right above here to make sure that it bought above that level. But these bursts of volume should not surprise a trader. These bursts of volume, it shouldn't surprise you that this comes in at these levels. Like, why are they buying so big like this, Doc? They use the news to scare everybody. This is all news. News is a lie. They use news to grab your money. They use news to grab your money. News is not real. Hopefully this is making sense. Good God Almighty. Because news is just moving in the context of the high time frame. And if they don't have enough money, they'll use that news to go down, only to send it right back up again. Is this making sense? And if they don't have the money, they'll go right back down. And then what they'll do, send it right back up again. And how will they do it? They'll start putting in these candles like this. See, this is what y'all waiting for. This is what you want. You're looking for these voids. Everybody type in the word, what are you looking for? If you start putting them in, I got your ass. Excuse me, no, I don't want to say that. I got you. That's what I want to say. Does this make sense? I'll be looking at it. I'll be looking at it like, okay, if you're not waiting for these moves like this and saying, okay, I need you to, you got, all right, if you break up here, you got to pull it back. Right? And if you break this, look, watch him come and break this high. I just want to show y'all this. So it puts in this high, right? They pull back. Watch him retest this, not by coming back into the void. He sits right on top of that level retest before he takes off. So now watch this. He creates this high. Now y'all been waiting for this buy right here. Everybody really waiting right here. They not. This is the confirmation on the 50%. You know this is the bottom of the range. You know if you put in a big candle in here, you going to the top, right? Because I know that above that, you pretty much look. But the best place to buy is at the bottom of the range. Hey, guys, what's the best place to buy? At the bottom of the what? You can say bands. If those bands are down here, that's even better. If you got your bands and your bands are at the bottom of the range, ooh, that's platinum. That's a perfect combination. When the bands are at the bottom of the range, and then you get this, you like, oh no, you gave it up. That's the pattern. I got the pattern now, Doc. I got the pattern. I have the bands. So those bands, let's say those bands are low right here, right? So I got the bands. And then on these bands, I already defined the range. So when the bands and the range come together, mwah, mwah, mwah. But how many of y'all are skipping out on this part of your journaling? How many of y'all are skipping out on defining the range? Who's skipping out on that? Who gonna confess tonight and say, I need to start defining my range? I need to start defining my range. Even if it's on a lower time frame, it's still a range. Sorry. Because this is the high and this is the low. This is the last low right here. Not this low. Not this low. See, because that's the low from that. That they didn't go past this low. So it went up, it went back, it went up. Not this low, this low. So I'm on these high time frames, finding them lows. Get low, get low, get low, get low, get low, get low. I'm looking at the low. So I'm like, all right, you right here. Because that was the last low before the last high. Not this one, this one. So I'm looking like, okay, so my buys are right here. I know if you pull up, shit, it got to the middle, right? And then it pulled back. Then it got back to the middle again. Then it got back to the high. Now it broke this high right here. There's the retest. There is the void. Do you see the void? Do you see the pullback into the void? Do you see the void again? Are y'all seeing this? Then they consolidate. Do you see the void? Do you see the pull back into the void? Do you see the pull out of the void? I want to make it to where y'all just keep seeing this shit over and over and over. How do you know that that is the bottom of the range? Glad you asked, right? I'm glad you asked. I'm looking at the range. I'm looking at the range. I'm looking at the range within the day. So this is 1 day. This is 2 days. This is 3 days. The void is the long candles, but you have to be in the. That's El Grace. This is one of the class I just taught. Do y'all understand what I mean by the void? Those who've been in the classes, we're gonna, because I don't want. I think I've taught it enough. I know El Grace got to be. You just joining, so we're gonna make sure that you get this. So this is what I look at, because I've been teaching on it. Like we've been going over it over and over and over, and I know that so many people don't. They call it by so many names: fair value gaps, whatever you want to call them, the long candles. But what it does is it creates an imbalance. What does it create? What does it create? Right? Imbalances, whatever you want to call them. Okay, so now she said, Doc, how do you know what is the low and what is the high? What is the low and what is the high? Because that can be confusing, right? All right, so now I'm always looking at, let's go to the front. Let's look at it as it's just going, because maybe this will help you. All right, so now I'm going to look currently at price right now. This is a perfect example. All right, perfect example. This is a perfect example of how to trade. And people are saying, where's the high, where's the low? Do y'all see this chart? This is a perfect example to teach this lesson. I would pay attention to this right here, right? All right. When I'm defining a range, right, I'm going to look at the previous day's range. The previous day high, previous day low. I'm looking at that. And I'm watching to see what price does in this range. Now, when I first look at this range, is it trending? So I look at the high and the low and I say, where is this direction? Well, this direction is going down. Do y'all see it? Right? This is going down while this is going up. Do you see it? But I'm looking at this range in the new price level. Now, if it breaks that range, breaks this range here, and everything depends upon context. So in every situation, it can be different. If you're looking at this range, I'm looking at, if you break out of this range, where are you buying up to? Is there another range in the next previous day? Right? I'm asking myself, on my fib level, am I expecting a buy out of this range? Because I'm inside of this range now. I'm looking at the context. This is the high. This is the low. Right? And I'm pulling back into this range. This is the in between. This is on a larger time frame. On a smaller time frame, I'm looking at a smaller range. So I have a bigger range and a smaller range. This is what I was teaching about, the range within the range. This is what's the most confusing part about trading, because no one's considering the larger context, asking myself, where's the probable move out of this range? If I asked you now and you saw the context, where's the probable move out of the range? What should you look for, buy or sell? Why? Because what's in the context? What's in the context? Who's in the context? So then this little move has nothing to do with this big move right here. So then while you're pulling back, I'm asking myself, while this big move is taking place, while you're pulling back, what are you looking for? You're looking to go into a range. Watch this now, inside the trend. There will be a range inside the trend. To continue the trend or weaken the trend. Does this make sense? Does that make sense? I wrote it out. I wrote it out. Do you see the trend? Do you see the pullback into a range? So then here, we went over this night, is the question mark right or wrong? Do y'all see the question mark? I'm wondering now, are you going to buy up from this range? Or are you going to buy down to this range? Right? Are y'all looking at this? I want to make sure y'all seeing this. So then what should you do in this range? We trend in this range. We draw a field. So I draw a field. Did y'all see what I did? And I say, where's my 50%? Oh my God. Who's having light bulbs go off? Are you having a light bulb? Are you having a light bulb? Who had a light bulb go off? Who had a light bulb go off? Who had a light bulb go off? Right? So then when you're using your board and your board is telling you to buy, then what do you do? All right. You're looking for the buy, 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 buy. Now, no, you don't have to practice draw fibs. I'm trying to see if I have this tool. I'm probably gonna make a tool for y'all, a fib tool. Platinums and everybody, I think I may make y'all my own fib tool that will automatically do that for you. When y'all like that, like draw the 50% on this and the 50% on this, like draw me that 50% level. Show me my 50% level on the move. That's an upgrade feature, wouldn't it? So if I actually created an indicator, I'm asking y'all, tell me because I created. Would you like that? That looks at the extension and then looks at it and then draws a fib level and says, all right, this is the 50% level of that move. So you know what that 50% level is? Hold on. Y'all give me a second. I may have some. I just may have some. Let me think. Let me see something. Hold on. I think I may do this. Just depends. One second. I may have some, y'all. And I'm gonna think about how I can code it for y'all. Yeah, I think I'm gonna do that. Yeah, I got something. Hold on. Y'all ready to see something? Type in number 2. So I will code this. I can code it, I think. Yeah, I think I can do that. All right. Check this out. So I can, it measured this fib, it's going to do it automatically. So it took this level to this level and showed you where the 50% was. And when price pulled back into that 50%, it draws this one to show you the fib level from here to here to show you what that 50% level is of this move. So you'll have 2 moves. So I'm going to show you the first move. One moment. Hold on a second. You can see the first move. Do y'all see the first move? Type in number 2 when you see the first move. So you're like saying, okay, this is the extension. I'm waiting right here in this side, this level. It pulls inside that level, and you're looking to buy back out of that level. That makes sense? This is for the people who can't draw fibs and want to draw it automatically for them. Okay. All right. So now, this is what we'll do. I'm going to code this to draw automatically for you. Just so y'all have it. We'll do that. And that way you don't have to draw it. Who enjoyed tonight's class? Did some of this make sense? And y'all could be saying yes, and you don't understand nothing I said. So then, how do I know? Looks like auto block to get auto. Looks like auto block to auto block. Then pull fields to get 50%. That's true too. I like what you said, Carrie. She said looks like auto block to auto block. If I go in, how many of y'all have our auto blocks? I like what she said. If you have our auto blocks, type in number 1. She said that. Carrie, that was really good. I'm actually glad you actually said that. She says, just looks like auto block to auto block. That's how you feel. Right? Do y'all see that? This is an indicator. If you don't have that, you can see auto block to auto block. She just said, draw your field. Grab this auto block, go to this auto block. Do y'all see that? And then you see the 50%. And then they put the auto block on it. That's the indicator I gave you. Auto block and then auto block. Did you see they pausing this auto block and then pausing that auto block? Right? And you're buying out of this auto block up. But they put an auto block there to pause right at that level. Is that making sense? Hey, Carrie, be honest, y'all. Let's everybody be honest. Let's be honest. Do we really use the tools, or is it having me going over and over and over, making the tools, you understand the tools better? Because I know that you have the tools. I know that you have them. It's now just implementing what we have. If we stay going over the same thing over and over again, like, okay, we're doing this, we're doing this, we're doing this. She said, you're a huge part. Oh, she's making me blush. Y'all know it's hard for a Negro to blush, but she's making me blush tonight. All right, so now we got to use what we have. But Carrie said it. Did y'all see this, Phil? And it's just auto block. So even if you went here, going over this key, I agree. All right, so now let's do this. So now, what if you have these two right here? Then what do you do? Man, we run out of time. I got less than 8 minutes or 9 minutes. So then take your fibs and draw it here, and then you can see your extensions. All right, go to your high order block, go to your low order block. Do y'all see that? Do y'all see what I just did? And that's my extension levels down. Then I go from my auto block the other way. And I look at my extensions up. I was like, okay, this thing could go up all the way up to this 2.0 up to this auto block. So it'll break this auto block and go up to this auto block. And I'm looking at my fib level. I'm like, yeah, it could go right about there. And you can see your extensions there. And so you can see your fibs here. If I took all of this out and said, okay, guys, this is going to move 2 deviations down, or 3 deviations down, or 4 deviations down, or it's going to move 2 deviations up. Do y'all see how I'm doing my deviations? Or 3 deviations up, or 4 deviations up, right? Past the auto block. Is it now? Are you seeing how we're doing this now, where you can see your extension levels outside of the range? Because your auto blocks will show you the range. We got some good tools here in NFO. I just have to say that. I feel like bragging on it. We have developed some great tools here. It's just now just using the tool. Now, if you have your auto blocks and you're using your auto block, how do I know? When you have an auto block like this, make sure you see this. that means it hasn't been retested. When you have the order block with a thick line, that means that order block has been retested, which means it's touched that order block, right? So now, do you see how it's thin up here? So then there has not been a break of the order block and retested that order block and then a push down from the order block. So then what you look for is a break of the order block and a retested order block. You want this close on this bar chart, Nicole, to be above that level, right? You want to have a close on the bar chart above this level, respecting the high of the order block. Did y'all see that? Right? So when it goes down, it's like, okay, I want to see you close above that order block because this is that high. Now I look inside that order block. I look inside and say, okay, these are these close levels. Right? I want to see you close above this. Look, they came back inside the order block and he could not close below that low. And look at the counter they put in. Do you see this big anomaly? They pulled back and closed it, then put in another big one. And pulled back and tried to close it, didn't come all the way down, and then pulled up again. But why are they doing this? Because in the context, is it a buy in the context? Absolutely. So I was expecting my order block to come in. I'm looking for my order block to come in at this level. And I would like for them to buy out that was an order block that came in right here. I can see it. Came in and then shot back down. Now they're buying right back up to this level. Ooh, I had some fun with y'all tonight. Who had fun on this class tonight? She said, order blocks are the best tool. I love it. Girl, don't be bragging on me. You know how that makes me feel. She said, it's the best tool. I love it. Sometimes they break through those order blocks. You want those order blocks to be, you want an order block, and then once that order block comes up, I'm using my board to see if they're putting some arrows in on that order block. Oh, let me show y'all that. I want to show y'all that, Carrie. Watch this, y'all. Watch this. Watch this. Carrie said something right. How do I know they're going to move out this order block? So then I go and I put my line on it. I want to move on that order block. I want to move out that order block, right? Am I saying that right? Give me a buy out this order block. I want that buy respecting that order block. Do y'all see those buys out of that order block? Because the only reason the arrows are coming in is because of volume. I want buys. I want buy arrows out of my order block. I want sell arrows out of my order block. I need the sell arrow out of here. I gotta have this order block was here. This sell arrow broke that order block. And so I take that order block all the way down with that line. Now imagine if you had all your lines on here. And you said, okay, I want to see the all order block on this time frame. Are y'all ready for this? I just want to show you this because she said that, and I thought this was amazing when you do it right. Forget the candles, right? Let's say we take and we leave the 1 hour order block on here. And we know that's that 1 hour order block. And we're on that 15-minute sniper chart. And we can get a 1 hour line. See my 1 hour order block? On the 15-minute chart? See those buys above that 1 hour order block? So when that buy is occurring above that order block, I see those 1 hour buyers come in with those 5-minute buyers. And and they're reversing the market. If I took that off and just said, here is on the 5-minute chart, and said, okay, here is those 5-minute buyers coming in above this line, and I can see those big candles coming in above this order block, there's your buy. But then you looked at the context and someone asked, well, why are you buying? Well, I'm buying because there was a big buy on GU and it just got back down to this 50% level. Even on my 15-minute chart with that hour order block, I'm just waiting for those candles to come out. Give me some voided candles. Give me big void candles above this order block. Got my attention. I look for those candles above my order block. Above what? If I'm looking for the buy, they're above my order block. If I'm looking for the sell, they're below my order block. And they're moving away from that. Are they moving above it? So then the question I'll ask you, if you have order blocks, are they moving above it? Are they moving away from it? Inbox us and we'll make sure we get it. When the top is bold, it's a stronger move. When the top is bold, yes, that means, well, it means it's come back and retested this level. Does that make sense? If you did gold, do you see the order block? Do you see the 1 hour order block? Right. So then I'm asking myself above this order block on the 15-minute chart, do I see big swole candles? Big swole. Do I see them? Do I see the big swole candles? I'm looking for swole. I'm looking for big candles above my order block. Where do they put them in? Let's see. All right, so they sold off, and then they put this one in right here. Do y'all see that one? And they never went below that one. Then we'll slide over to gold over here. Watch this. Look at gold. Now I gotta let y'all go. Hold on. I'll slide this over and then I'll be done. All right, so yesterday on this hour trend on the 15-minute chart, do you see any candles in here yesterday that showed the buyers? Any candles in here? Do you see buying candles when they created voids on this? Because this is the 1 hour trend. They haven't reversed it. So then I see this one, right? I see them buying up and then selling off to close it. I see this one, right? Then at this session, I saw them buying up in here. Then I see them pull back. Then I saw this. Then what do I see here? I see them here. I see them here in the Asian session. And then they slowing down right up in here. Does this make sense? So then throughout the day on these sessions, you should be able to see when they're putting money in that market. Because when they put it in, they don't come back and close it. And they'll start buying up again. Right? And when they put it in, they don't come back and close. Look, they'll put this in. And then what does it do? It'll get up here, get everybody in up here, then come back and just close that order out. But no one's thinking about the close order. So then what does it do? It buys up. And it holds. They never close it below this level. And right when everybody walks away from their desk, walks away from the chart, then they come in and they slap this one in. Do. And you see them come in here, right? And then what do they do after they come in? They come in and clean all that up. All this with this candle here. But they never close below this level. Then what do they do right here? And then they pull back. But they never close. Then what do they do here? They go up here, and then they start buying up. They put in some money right here, right? And they went back and look what they did right here. Close some of it. Then shot up right here. But look what they did. Now, everybody who's in gold is frustrated because they bought up, but they never closed here So he has the right to come here before he buys up again. Because he's going to close the order. But if you're waiting down here, you wait for him to come down here and then you buy up. Or you wait for him to come right here and then you buy up. You're waiting at these bottoms right here and then you buy up. Right? You're waiting and you're looking to see, okay, put one of them candles in like that at one of these levels. And I know you're getting ready to buy up again. Does that make sense? I'm waiting at the close. I'm waiting for you to get down, back down here, and then I'm buying up. Right? If I don't have if I need an order block, I can change this. It says, give me the current time frame order block. Bam. Do you see the order block now? So now, if he don't break here, then I draw my fib from order block to see if he's going to continue to come down or continue to come up. And I'm still doing it the wrong way. Well, I don't know why I go from the top to the bottom. Right? I'm looking for him. Right? If he comes in, this is a good buy spot. Right? This is another good buy spot. You come down in here, I'm like, oh, because you're going to close that up. I'm waiting to bob right here. So I'm waiting to bob in here and waiting to bob right in here. Order block to order block. Carrie said it. Y'all getting it? Now it's time to say goodbye to all my little friends.